The checks are changing, and if you're collecting Social Security right now, what hits your bank account next month could look different than what you've been getting all year. November 2025 marks a pivotal shift that's already causing confusion across kitchen tables in every state. Here's what's actually happening, and why the timing matters more than most people realize. For decades, cost of living adjustments came in January, like clockwork, but recent legislative updates and emergency provisions have created a mid-year adjustment window that catches most beneficiaries completely off guard. We're talking about real money here, not pennies, but amounts that affect whether you're comfortable this winter or counting every dollar at the pharmacy. The qualification criteria aren't what they were even 6 months ago, and the Social Security Administration's own website has been struggling to keep up with the changes. Some recipients will see increases automatically. Others need to take action before the November deadline, or they'll miss out entirely. The difference between knowing and not knowing could mean hundreds of dollars every single month moving forward. Let me break down exactly who qualifies, what the actual numbers are, and the 3 things you need to verify in your account before this takes effect. Let me be straight with you about something that's causing a lot of unnecessary worry right now. There's been a massive amount of misinformation floating around about Social Security changes in November 2025, and honestly, it's getting people worked up over things that aren't even happening. So before we go any further, I need to clear the air and give you the real story. Because the last thing anyone needs is to make decisions based on rumors or half-truths that spread like wildfire through Facebook groups and neighborhood conversations. The truth is, Social Security operates on a very specific calendar that hasn't fundamentally changed in the way some of these viral posts are claiming. The annual cost of living adjustment, which everyone knows as COLA, traditionally gets announced in October and takes effect in January of the following year. That's been the pattern for years, and it's designed that way for very deliberate reasons having to do with how inflation data gets calculated and how the Social Security Administration needs time to process changes for over 70 million beneficiaries. Now, you might be wondering why we're even talking about November if the changes happen in January, and that's actually a really important question that gets to the heart of what's really going on right now. What's actually happening in November 2025 is that this is when many people will start seeing their Medicare Part B premiums adjusted in their statements, and because those premiums get automatically deducted from Social Security checks for most people, it can look like your Social Security payment itself is changing. This is where the confusion starts to snowball. When someone sees a different number in their bank account or on their benefit statement, the immediate assumption is that Social Security made a change. But what's really happening is that the Medicare side of the equation is shifting. Medicare Part B premiums are reviewed annually, and the new rates get locked in during the fall enrollment period, which means November is when you start seeing previews of what your January payment will look like after those premium adjustments are factored in. Here's something else that contributes to the confusion, and it's worth understanding because it affects how you read your statements and plan your budget. Social Security payments are always paid in arrears, meaning the payment you receive in a given month is actually for the previous month's benefit. So your December payment is for November's benefits, and your January payment is for December's benefits. This timing quirk means that when changes do take effect in January, you're not actually seeing them reflected until that January payment hits your account. Add in the fact that payment dates shift based on your birth date and when you originally claimed benefits, and you can see why people get confused about exactly when they should expect to see changes show up in their actual deposits. Now let's talk about what actually determines whether you see an increase in your Social Security benefits, because this is information that applies year after year, not just in this particular November. The cost of living adjustment is calculated using something called the Consumer Price Index for urban wage earners and clerical workers, which is quite a mouthful, so everyone just calls it CPIW. The Social Security Administration looks at the CPIW numbers from the third quarter of the current year and compares them to the third quarter of the previous year. If there's been inflation during that time, meaning prices have gone up, then benefits get adjusted upward to help maintain your purchasing power. The percentage increase applies across the board to everyone receiving benefits, though obviously the actual dollar amount you see will be different depending on what your current benefit amount is. Something that surprises a lot of people is that COLA increases are automatic if you're already receiving benefits. You don't need to apply for them. You don't need to call Social Security. You don't need to fill out any forms or verify anything online. If you're entitled to the increase, it just happens. The Social Security Administration handles all of this on the back end, and the new amount simply shows up in your payments starting in January. This is actually one of the few things about Social Security that's genuinely simple and straightforward. But because people are so used to having to jump through hoops for everything else, they assume there must be some action they need to take. There isn't. If you're getting benefits in December, you'll automatically get the adjusted amount in January. However, and this is a big however, the full story gets more complicated when we start talking about how much of that increase you actually get to keep. This is where that Medicare Part B premium situation comes back into play in a really significant way. There's something called the hold harmless provision that protects most Social Security beneficiaries from having their actual payment decrease if Medicare premiums go up faster than the COLA increase. Sounds great, right? And it is. But it doesn't apply to everyone. If you're new to Medicare, if you're a high-income beneficiary, if you have Medicare Part B but you're not yet collecting Social Security, or if you have your Medicare premiums paid by Medicaid, then you don't get hold harmless protection. For these groups, a big jump in Medicare premiums can actually eat up the entire COLA increase and sometimes even more. Let's put some real numbers to this so you can see how it actually plays out in someone's budget. Say your Social Security benefit is $2,000 a month and the COLA increase is 3%. That would give you an extra $60 a month starting in January. But if your Medicare Part B premium goes up by $70 a month during that same time period, and you're not protected by the hold harmless provision, then even though Social Security technically increased your benefit by $60, your actual take-home amount would be $10 less than what you were getting before. This is legal. It's built into how the system works. But it catches people off guard every single year because the COLA announcement gets all the attention and headlines, while the Medicare premium changes get announced separately and don't generate nearly as much coverage in the news. The income thresholds that determine whether you pay higher Medicare premiums are another piece of this puzzle that affects a significant number of people, especially those who had a good year financially or who made certain financial moves without realizing the Medicare implications. Medicare uses your tax return from 2 years prior to determine your premiums for the current year. So your 2025 Medicare premiums are based on your 2023 tax return. If you had a one-time event in 2023, maybe you sold a property, took a large retirement account distribution, or had significant investment gains, that could push your modified adjusted gross income above the threshold where income-related monthly adjustment amounts kick in. These IRMAA charges are basically surcharges on top of the standard Medicare Part B and Part D premiums, and they're structured in tiers based on your income level. For individual filers, once your modified adjusted gross income goes above a certain threshold, which right now sits at around $103,000, you start paying IRMAA. For married couples filing jointly, that threshold is about $206,000. Above those levels, there are several income brackets, and as you move up through them, your Medicare premiums can increase substantially. At the highest income levels, you could be paying several $100s more per month than someone paying the standard premium. Now here's the kicker that relates back to November and why people think there are Social Security changes happening. If your income from 2 years ago puts you into an IRMAA bracket, you'll get a notice from Social Security, because they're the ones who collect Medicare premiums for Medicare, and that notice typically arrives in November or December. When people get these notices showing higher premiums being deducted from their Social Security checks, they often interpret it as Social Security reducing their benefits, when really it's Medicare premiums going up. There is a way to appeal IRMAA determinations. If you've had a life-changing event that reduced your income since that tax return from 2 years ago. Life-changing events include things like marriage, divorce, death of a spouse, work stoppage, work reduction, loss of income-producing property, or loss of pension income. If any of these apply to you and your current income is significantly lower than what it was 2 years ago, you can file Form SSA 44 with Social Security and provide documentation of the life-changing event and your current income. If approved, they'll recalculate your Medicare premiums based on your more recent financial situation. This doesn't happen automatically, though. You have to initiate the appeal, and you need to have documentation ready to support your case. Another aspect of November that creates confusion is that this is when people who are approaching their full retirement age in the coming year need to start paying close attention to the earnings test limits. If you're collecting Social Security before your full retirement age and you're still working, there's a limit to how much you can earn before Social Security starts withholding some of your benefits. This limit changes every year based on national wage trends, and the new limit gets announced in the fall for the following year. For 2025, if you're under full retirement age for the entire year, Social Security withholds $1 in benefits for every $2 you earn above the annual limit. In the year you reach full retirement age, there's a higher limit that applies only to the months before you hit full retirement age, and the withholding ratio is more favorable, at $1 withheld for every $3 over the limit. This earnings test confuses people tremendously because they see it as Social Security taking away money they've earned, but it's actually more like a delayed payment. Once you reach full retirement age, Social Security recalculates your benefit to give you credit for the months when benefits were withheld due to earnings. Your monthly payment gets adjusted upward to account for those withheld benefits over the remainder of your lifetime. It's not a perfect recovery because of the time value of money and the fact that you didn't have access to those funds when they were withheld, but it's also not the permanent loss that many people believe it to be. The other major thing happening around this time of year that intersects with Social Security is the open enrollment period for Medicare Advantage and Part D prescription drug plans. This runs from October 15th through December 7th every year, and the decisions you make during this window can significantly impact your out-of-pocket costs for the coming year. Some people focus so much on the Social Security COLA increase that they forget to review their Medicare coverage options. And that's a mistake because health insurance plans change their coverage, their premiums, their copays, and their formularies every single year. A plan that worked great for you this year might not be the best option next year, either because it changed, or because your health needs changed, or because a different plan is offering better coverage for your specific situation. What really matters for your financial security isn't just whether Social Security is giving you a raise. It's whether your total income is keeping pace with your total expenses. That means looking at the complete picture, including Social Security, any pension income you have, required minimum distributions from retirement accounts if you're at that age, investment income, and then on the expense side considering not just Medicare premiums, but also your actual healthcare costs like copays and deductibles, prescription drug expenses, housing costs, utilities, food, transportation, and everything else you spend money on throughout the month. The COLA is designed to help with inflation on average, but your personal inflation rate might be higher or lower than the national average depending on what you spend money on and where you live. So when we come back to this question of what's happening in November 2025 and whether you qualify for changes, the honest answer is that November is really about information and preparation rather than actual benefit changes. It's when you should be reviewing the notices you receive from Social Security about your upcoming benefit amount for January. It's when you should be checking whether your Medicare premiums are changing and understanding why. It's when you should be evaluating your Medicare coverage options for the coming year. It's when you should be looking at your budget projections for the first quarter of the new year, so you're not caught off guard by any changes in your net deposit amount. None of this is glamorous or exciting, but it's the real work of managing your Social Security and Medicare benefits effectively, and doing this work in November and December means you start January with clarity and confidence instead of confusion and concern.